they call that you learned under what you call this one, bills of exchange. Then joint venture, when you share the funds, how to record the transaction. When you expand your business in other cities, how do you record those transactions? Okay, and when you don't maintain anything, is an incomplete records. When you are a non-profit organization, now the last unit tells you how a non-profit organization, charitable trust, all these maintain their books of accounts. You will learn under the non-profit organizations. Yes. Good afternoon, all of you. Welcome to wherever you online classes, Commerce online classes. You all are second semester students. So I'm Ms. Sudharani, allotted financial accounting part 2. Okay, and I'll just give you the briefing of financial accounting syllabus. Hope now this is visible to you all.
Yeah, madam, now it's visible.
Yeah. So financial accounting part 2. Under this first block is about bills of exchange. How when a company, when a firm do their sales on credit basis, how do it manage, and some evidence credit sales, as they made the credit sales as an evidence, legal evidence. And next, for further, in order to see that their funds are not blocked in the form of credit sales, and to continue their business transactions without any hassles of lack of funds, how these bills of exchange they use, will learn under the bills of exchange topic, recording of transactions. Okay, the second block is about consignment accounts. Consignment accounts tell, under this you will learn when a businessman expands his business to different cities and has to do his business where he cannot be everywhere. So how do he record? How do he maintain his business transactions? Because when his business expands to different cities, and he will appoint some person, and he will send some goods from his main head office, okay, main office, and that person will sell, and for whom he sell, give some commission. So how these transactions are recorded by the businessman, we learn under the consignment accounts. The third block is joint venture accounts. This joint venture is a kind of like a system where businessman joins with other party for financial support or managerial support or commercial marketing support. Okay, so here we learn the managerial support means financial support. When two people join, it's not partnership, it's a separate from, it's apart from the partnership. Here joint ventures, here you will learn what is joint venture procedures, how do they record, okay, and what it is exactly, we will learn under the joint ventures books. The next one is, so till here, the first 3 blocks, as a businessman, registered business entity, while maintaining the accounting records and the preparation of financial statements, apart from the regular business, if anything, whatever the other transactions are there, how do they record, we learned. The fourth block is entirely about the business entities, sole trader firms which are not registered and which don't maintain any books of accounts systematically, but have to pay their taxes on the income. So how do these firms will calculate their profit or their financial position, is what we learn under accounting from incomplete records. So we also can call it as a single entry system. Means these firms do not maintain any what you call books only few credit transactions they record, means credit, whatever the credit transactions they do with their customers or with their suppliers, only they record. Rest all they'll not maintain. So that is nominal account. So what about other transactions? How do they calculate their profit? We learn under the accounting from incomplete records. The fifth block is about accounting for non-profit organizations. In the business system, there exists a non-profit entities also. Means the business entity, the entities, economic activity, non-economic activity means, but they involve some economic activity, but not for profit, for service. They involve economic activities, not for profit, but for service, like charitable trust. Okay. Charitable trust, whatever there. How do these charitable trusts or non-profit organizations or non-trading organizations record their transactions? Because they do involve some expenses and revenues and incomes. So how do they record their transactions? We will learn under the accounting for non-profit organizations. Okay, charities, charitable trust, clubs, all these comes under the non-profitable organizations. How these non-profit organizations record their transactions, because they do record their transactions, financial transactions, but not for making profits with the service, but to have a monitor of, or to monitor their funds, how they are receiving, what are the sources of funds that they are receiving, and how they are spending, to have some monitor upon that. They record these transactions. So what is the procedure for recording the transaction, financial transactions of non-profit organizations? You will learn under the fifth block. Okay, I hope you all are clear with this. So let us start with our first topic, bills of exchange. One second. Bills of exchange. As I mentioned, bill of exchange, it's a transaction bill of exchange, as I mentioned, credit sales. See, in a businessman cannot do his business exclusively on cash basis. Because if he would like to do only exclusively on cash basis, what happens? He will miss some of the customers who prefers the credit. So it's compulsory for him to entertain the credit transactions, credit sales also. He has to sell his goods on credit basis also. But when he goes on sell his goods on credit basis, what happens? His amount will be logged in the form of credit. Means, say for example, there are in a market there are 100 customers, and if he sells 60 customers on credit and 40 customers on cash, only for, but he has to supply for 100 customers, where from he get the funds, right? So at the same time, he cannot forego these 60 customers who prefer the credit. So what he will do, among these 60 credit customers, he will, in order to mobilize his funds, in order to see that liquidity of the business will not affect, he will go for evidence. Okay, proof, legal proof, or evidential documentation, documental evidence, which is acceptable legally. That documental evidence which is acceptable legally is we call as a bills of exchange. So let us see. How it is means. First thing, how this bills of exchange documental evidence helps. First, it has Okay, it helps the businessman in order to sue the customer if he not pay the amount. Okay, second thing, he can exchange this in the bank and take the advance upon this. Or third thing, he can exchange this with his creditor, that is his supplier, from whom he brought on credit the goods, and take the extend his loan or his credit further, or make his credit payment by transferring this bill to his creditor. Okay, so that's all we'll understand in the forthcoming topics. Means in this forthcoming class. Okay, so bill of exchange is a documental evidence which provides convenience to the seller to make sure the liquidity of business will not get affected. Okay, he do credit sales. When he do credit sales, he will take a documental evidence from his credit customers to whom he sold goods on credit. Those credit customers we call in accounting language as creditor. Sorry, debtor. That is a debtor. So this documental evidence helps the seller to sue the customer in case he don't pay the money in time, or to transfer the document and collect the advance from the bank, or to transfer the document to the supplier, to his supplier, and make sure his payment is made through him. Okay, so that is our basic understanding of the topic. Now let us see, as per Negotiable Instrument Act. According to section 13 of one of the Negotiable Instrument Act 1881, a bill of exchange is a negotiable instrument payable either to order or to bearer. This is important here for us. It can be, what can be called as a negotiable instrument? A promissory note, a bill of exchange, or a check. These three can be called as a negotiable instruments because it can be payable. Means the amount written on these can be payable either to the order of the person written or the bearer, the person possessing this document. Okay, so that is meaning of negotiable instrument. And now coming to the bills of exchange. So here, okay, before we go to the negotiable instrument, bills of exchange, we should know about what are the types of negotiable instruments. These negotiable instruments are recognized by statute, okay, recognized by usage or custom. Like statute means by a governing statute. Okay, that is bills of exchange, promissory note, and checks. These comes under the recognized by the government, and recognized by user custom are hundis, share warrants, dividend warrants, bearer debentures. Okay. Now let us see, bill of exchange means what? Bill of exchange means is an instrument in writing containing an unconditional order signed by the maker directing a certain person to pay a sum of money only to or to the order of a certain person or to the bearer of the instrument. So what is a negotiable instrument? So what is bills of exchange? Bills of exchange is one of the negotiable instrument, which is in a writing. It must be in writing. We will see under the features or characteristics of bills of exchange. A bill of exchange is an instrument which is in writing, having unconditional order. Means there should not be any order, any condition. See, you pay, I pay, you only when farm is harvested, or I pay only when I get profits. I pay only when I get returns. There should not be any conditions. Or if you don't pay, I'll take your farm. If you don't pay, I'll take your vehicle. Such kind of conditions. Okay, there should not be any conditions. Unconditional order without any conditions. signed by the maker. Means whoever writes the bill, that person must be signed, and directing a certain person to pay sum of money. And whoever writes the bill, that person direct the other person who has taken the money or to whom goods are supplied on credit, that is the customer, directing him to pay the amount. That is, here he also mentioned what amount to be paid. Only to or the order of a certain person. Means he will mention. I'll make it simple here. That is seller. Seller writes the bill and signs the bill. Ask the buyer, that is customer, to pay specified amount, whatever the goods value sold, by mentioning the name of the person to whom the bill has to be paid, or saying that whoever possesses that bill. That is bill of exchange. I hope many of you are having idea about promissory note. How many of you heard about promissory note? Yes, I want response. Many of you might be having knowledge about promissory note. If you have no idea, you can ask, yes, you can ask your parents, they will tell you. In promissory note, the person who borrows money writes and promises to pay the amount borrowed within the date of whatever he mentions. Okay, so that promissory note kept by the person who lent money. Okay, it's a kind of promissory note with a little difference. Okay, so here bill of exchange is a one where the seller draws the bill in writing and specifies the amount, and also specifies the name of the person to whom the amount has to be paid, or bearer of the bill, he says. Okay, the next. So this is the specimen of bill of exchange. See here, the place, date of bill, and here, see, 3 months after the due date, pay XYZ or order. Means on the date of he will say, you pay to some, not XYZ, you pay to ABC. That is what or order. On the date of payment, this person who has drawn the bill will also say, here he mentioned XYZ and also said order. So if we don't give any specific order, this creditor, that is the customer, debtor, that the customer has to pay to the XYZ. Okay. If he gives any order, as per his order, the debtor, that is customer, has to pay. That is what is. See, 3 months after due date, pay XYZ or order the sum of ₹1,000 for value received. So here they will give one revenue stamp, and here they mention the person who has drawn the bill. And this bill has to be accepted by the customer. That will come. Okay. Here. This bill has to be accepted. Here, like this, he do. Then this person, that is the seller, will sign. Also, this person to whom goods are sold on credit, that is the customer, credit to whom goods are sold on credit, that's the debtor, has to write, yes, I accept. Then he will sign. That is the reason why we say acceptance given by the debtor. Okay, acceptance given by the debtor. He will write. See, without the customer's consent, if I draw this bill and keep with me, is there any use? No, I cannot go. Because what is, you just mentioned you are someone to have pay, and you didn't mention who has to pay that bill amount, and there is no acceptance from your customer, right? So this bill must be signed by the debtor, saying that yes, I accept. You should write I accept and then sign. That is what called accepted. The bill has been accepted. Okay. So this accepted bill will be with whom? With the seller. Okay, with the seller. Because he needs the proof, right? That's it. Now let us see some of the important features and contents, the parties. Yes. The bill must contain the date, that is date of issue of bill, on which date the bill has been issued or drawn. That is important. The date of issue of bill is important. Okay. It should be written. The bill date must be written. The next term, that is what is the, for how much period the time has been given to draw to pay the pay. See here, let us go to the previous one. See, 3 months after due date. This is the bill date, and 3 months is the due date term. Okay, amount here he mentioned 10,000 rupees. Okay, and the stamp, there must be a revenue stamp affixed. Okay, and then parties here, the person drawing the bill, that is writing the bill, that is the seller, and the person on whose name the bill has been written, that is buyer, that is customer. I accepted his name must be there. So date, these are the parts of bill. A bill, that is some important contents of the bill, some important matters of the bill must be given in the bill. Details must be provided in the bill, then only it will be valued, okay, legally. So first, date. Which date? Date of issue or writing the bill is important. On which date the bill has been written, that date. Okay. The next term, what is the credit term? The period of term allowed for the customer to pay the bill amount, the term of the bill. That is he drawing the bill, writing the bill for 3 months, 4 months, 1 month? What is the bill term? The term of payment for the customer. Okay. The next, amount. Yes, certainly without amount it's difficult, right? So what amount the customer has to pay? The amount due, the amount that is due to be payable is also important. Okay. The next one is stamp. Yes, the bill, this entire one has to be written on a stamp paper or some revenue paper. Okay, revenues must be affixed. Next, parties. In the bill, the name of the bill writer, the name of the seller, and the name of the person accepting the bill must be there. Let us see the parties and who are those parties and what are they called here in terms of bills of exchange. Here the same contents are mentioned as the features of. So must be instrument in writing, signed by the maker, an unconditional order. The bill should always be an unconditional order. He should not mention, you must pay me 10,000 rupees of bill in 2 months. Otherwise, I'll take your bicycle. It should not be like that. Okay. It should be an unconditional order. The order must be to pay money and money only. Yes, here he should order the seller, the customer, to pay money only, 1,000 rupees, to pay rupees 1,000 or a cycle worth 1,000. It should not be. Okay, it should be only to pay rupees 1,000. That's it. If you are not able to pay 1,000, I'll take your, you give your cycle. That's not like it. Okay. The next, sum payable must be specific. Okay, the value of land you must pay, the value of goods purchased you must pay. It should not be mentioned like that. What is the value? You specify in terms of money. You specifically, yes, what is the value of goods sold? 10,000 goods, write 10,000. What is the value of land sold? 2 lakhs, write 2 lakhs. But it should be, the sum payable must be specific. Okay. The next one is amount must be paid within a stipulated time. That is whatever the term of the bill has been given, the seller has given the term of payment. Within that time, the buyer, that is the debtor, must pay. The next, the name of the drawee must be clearly mentioned. So otherwise, how we make the draw? The drawee here is customer on who is taking on credit basis. Okay, the name of the drawee must be clearly mentioned. If not mentioned clearly, what happens? You cannot sue that person if you don't pay. Because court will ask, where is his name? You didn't mention his name only. Right? See, this bill has some flaw. What is that flaw? Name of the drawee is not given. Only the person who has it given. Drawn, right? The next must be dated and stamped. Yes. Without date, I said payable after 2 months. From which date? I should pay, right? So on top of the bill, date must be there. Date must be there. Stamp must be there. Without these, it is again not valid. So a bill must be an instrument in my writing. It's not oral. It must be in writing, signed by the maker, that is by the seller, and must be an unconditional order to pay, and to pay money only. What amount of money to be paid must also be specific. The period within which the term of the bill payment has to be mentioned, and name of the party on whose name bill has been drawn. That is the credit customer. Who is the credit customer? Who is liable to pay that bill amount? That party's name must be there. Then the bill must be dated and stamped. Yes. In bill of exchange, there involves 3 parties usually. Okay. In that 3 parties, first party is drawer. Okay. Who is the drawer? The person who draws or writes the bill. We call him as a drawer. Okay. This drawer, the bill may be drawn by the seller himself. Okay. Generally, sometimes, majority of the times, seller himself draw the bill, that is, writes the bill. So, drawer means the person who draws or writes the bill. We call him as a drawer. Usually, the seller himself will become the drawer, or the person who is giving money, creditor. Okay. The second one is drawee. The drawee is the person on whom the bill is drawn. He is the purchaser or debtor, and who is ordered by the drawer to pay the amount. Yes, purchase. So customer to whom goods are sold on credit, that customer is called as drawee. Okay, drawee is the person on whom bill is drawn. Okay, and he is the person who purchased the goods. That's why on credit. That's why we call him to the form. He is a debtor. And that debtor, the seller is ordering, you pay this amount to my friend so-and-so. Okay. So the next third person is payee. Payee means to the order. See here the bill. To pay XYZ. So here XYZ is the payee. So the person who has the right to receive the amount of the bill is called the payee. The payee may be a third person of the drawer himself. generally, majority of the questions, whatever you get in exam, the drawer and payee remains the same in general also. Okay, drawer and payee remains the same. Who is drawer or payee most of the situations? The seller of the goods. I am selling the goods. I only would like to receive the money. So I becomes the drawer. I am writing the bill and asking you to pay me only. So I am the drawer and payee. And you are buying from me and you will become a drawee. You're okay? So I'll explain this with a small example. See, Monica is the seller. Monica, are you there? Monica, are you there? I think Monica not there. I'll take Harish. Harish is the seller. Monica also there. Harish is the seller. Monica is the buyer. Okay. Harish is doing a station, some business, furniture business. Okay. And Monica came and asked Harish, Harish, I want living room furniture. Then, then Harish said, yeah, it's ready, but it costs 5 lakhs. The entire living room furniture cost 5 lakhs. Then Monica said, okay, I'll pay 5 lakhs and I'll buy. Then Harish can write the bill of exchange. I want the response. Harish can write bill of exchange?
Yes, ma'am.
No, because Monica is buying by paying cash. If there is a cash transaction, no headache only, right? Because Harish is, remember Harish, you are a furniture shop owner. Okay, you have a furniture shop business, a big furniture business. So Monica came to you and asked, I would like to buy furniture, a living room furniture. You said 5 lakhs. Then Monica paid you 5 lakhs and took the furniture. Then do you write bill? Yes, no, very good. Then then Monica took the furniture and left. After that, Afsha came. Afsha came and asked, I want entire house furniture. Harish, yeah, I heard about your furniture shop. I want entire house furniture. Living room, kitchen, bedroom, entire house furniture I want. Then Harish said, yes, it takes 10 lakhs. Okay, Harish said 10 lakhs it takes. Then Afsha said, okay, but I pay only 4 lakhs now, 6 lakhs, I'll pay you later. Then Harish will write the bill or not? Will write, yes. Then for how much amount he will write? How much amount he will write? Very good, very good. Right? Yes. So Harish will write the bill for 6 lakhs because though Afsha purchased for 10 lakhs, she paid 4 lakhs cash and balance 6 lakhs she is ready to pay after some time. So for that 6 lakhs, Harish will write the bill. The next, Nandini came. Nandini came and asked Harish, I'm going for a new house. Okay, I want entire interior design for my new house. What it would cost? Then Harish said it cost 15 lakhs or 12 lakhs. Then Nandini said, I can't pay anything now. I want because I'm already constructing house. So I spent a lot of money on my house. So my money is not there sufficient. So I want you to supply me on credit. Then Harish supplied the entire house furniture for her interior designing, which cost 15 lakhs. Now tell me, do Harish write a bill or not? Do Harish write bill or not?
Not, ma'am.
Yes. For how much amount? The entire 15 lakhs. If the cost is 15 lakhs, we write the bill for entire 15 lakhs. Okay. So now the question. What about Monica? Paid cash, no bill. And then Afsha has paid 4 lakhs and 6 lakhs bill. And so Harish said, you pay the 6 lakhs after 2 months to me. Okay. Then bill written. Then is that enough? No. Afsha also has to sign. Yes, I accepted. Right? You must be in writing. And what is the amount? 6 lakhs. What is the term? 2 months from today. And then Afsha must sign and accept it. Okay. He said to pay with me only. The next, who purchased from him? Nandini. From Nandini purchased for 15 lakhs. And the entire bill she want, entire furniture she want on credit. Then Harish said, 15 lakhs at a time, I give you credit. Where should I go? How should I make my payments to my supplier? To do one thing. I'm giving you 2 months, 3 months time and pay me or on order. Because so what happens? This on the date of payment, this Nandini as instructed, if instructed by the Harish, will pay to her, to the Harish suppliers. Order to pay. Harish suppliers are ABC Furnitures. Then Nandini will pay to ABC Furnitures after 3 months. Did you all got? Did you all got? Yeah. The next one is that. So here, who is the drawer? Who is drawer? Let me know. Who is drawer? Please. Very good. Harish is the drawer. Okay, because he is selling and he is writing the bill. And who is drawing? Who is drawing? Not all customers. Here, Monica is not a drawee. So she's paid and left. Right? Customers to whom he sold on credit. Okay, customers to whom he sold on credit. Harish customers to whom he sold on credit. That is Afsha and Nandini. Afsha and Nandini are customers. And who is paying? Is pay is here. If the pay is there, who? Who is paying? In Nandini's case, pay is there. Because Harish said, 15 lakhs I'm giving means it's difficult for me. So you go and pay to my supplier. And he mentioned the name. Who is paying? ABC company, I just said. Right? So, major in Afsha's bill, Harish himself is the drawer and payee because he didn't mention anyone name. So himself becomes the drawer and payee. But in Nandini's bill, he mentioned to pay ABC firm. So ABC is the payee. Understood? So that's the 3 parties to bills of exchange. Okay. Now advantages, if you see, why do they go for bill of exchange? Because for settlement of debts as a legal evidence to fix the date of payment. More than that, acknowledgement, written and signed in writing and signed, it will be there. So it can be used as acknowledgement of debt and they can proceed. And during the period of credit, the drawer can take the advance if he need funds before date. Because see, Nandini's bill he diverted, but Avsha's bill he kept with him, 6 lakhs. Okay, but Avsha he gave 2 months period. Before that 2 months period, he wanted money, but he cannot force Avsha or Nandini to pay before the period, right? Because he gave them Avsha he gave 2 months period, Nandini he gave 3 months period. So Harish cannot force these two people to pay money before that. So what happens? Harish can take the Avsha's bill and take the advance on the Avsha's bill from the bank. Okay, he can keep the Avsha bill in the bank, take the advance amount on that bill from the bank. Why bank will give, ma'am? Yes, gives because it gets commission. Okay, bank will give advance on the bill and it give on a commission. Say Avsha's bill is for 6 lakhs, right? And the commission, if it is charging 20%, how much? Or 10% you say, 60,000 it cuts and 5,40,000 it paid to the Harish. So advance. Understood? Are you getting? How you do you keep your gold with the bank and take the loan, and upon which bank will charge interest. Again, when you get money, you will pay and you will collect back your gold. Same here, it's instead of gold or such in case of gold, there we are calling interest, and here in case of gold, you are submitting a bill. You are taking interest, advance. Okay, drawer can convert the bill into cash by getting discounted with the bank. Now coming to the types of bills, we have inland bill and foreign bill. Inland bill means both the parties, that is drawer and volume. Yeah, and louder only. Both the parties are, if both the parties to bill are within the India, both the parties to bill are within India, or if all 3 parties are there, all the parties of bill are within India, we call it as inland bill. Okay, a foreign bill. Foreign bill means what? When, one second. If one party is in India and the other party is in, one party is in India and the other party is outside the India, then we call it as a foreign bill. Okay. The next one is trade bill and accommodation bill, the other category. Trade bill means a bill which is drawn for the purpose of business. When credit sales takes place, we call it as a trade bill. Means between the buyer and seller, they took a credit sales, and in order to have a proof of these credit sales, if a bill has been drawn, then we call it as a trade bill. Okay, trade bill. Then what is accommodation bill? Accommodation bill is the one mutual understanding where buyer and the seller or 2 sellers, a supplier and Harish. See, Harish supplier is ABC company. Harish is a seller of the furniture. So our supplier ABC company needs funds. Harish also needs funds. So mutually both of them came to understanding and has written a bill. Then that is called accommodation bill. Means Harish and ABC company both are in need of funds, but they don't have the funds in their hand. So what they did, they came to an understanding. Yes, ABC company said, see, you need fund, I need fund. So what we do one thing, I'll write a bill on your name for some 10 lakhs and we'll discount that bill in the bank and we'll share the amount. So you can complete your work, I can complete my work. Again, on date of payment, I'll pay my share of amount to you and you go pay in the bank. Like that, they will come to a mutual understanding and make the arrangement of funds through bills. Such kind of arrangement of funds through bills are called as accommodation bills. Demand bills and time bills. Demand bills are those which have no time. Actually, what we said on the bill, the term of bill must be there, right? And sometimes in big businesses, when crores of rupees of trading takes place, and for a shorter period of shorter period of credit exchanges, demand bills will be issued. That is, the customer, that the drawee is liable to pay the bill amount as and when the seller asks to pay. That is demand bill. Time bill, which has a term and date to pay. That's all, right? I hope I made you all understand this today's topic. As we started little late today. Very good. Thank you, dear. So tomorrow's class, I would like to teach you problems. Okay. So I request you all to be ready with your pen and paper. Means we are not going to work out any problems in the given period. I'll explain, but whatever the tips or points I'll mention, that you can note down. Done?
Okay.
And, yeah, as we started 15, actually I thought starting a small problem itself today, but as time not permitting, we'll do it in our next class.
Okay, madam.
Done. Any of you are having any doubts?
No, ma'am.
Right, thank you. Shall we leave? I expect same number to be attended regularly for all classes. The 22 numbers, whoever are there. Okay. And invite your friends also, those who know, to attend the class and take the benefit. I hope you all did well in your first semester exams. Okay. So the same spirit will continue the second semester. If you have missed your first semester, don't worry. See that you don't miss your second semester and do well in your second semesters, instead of keep going on with the backlogs. Okay. Right. Thank you all.
Thank you, ma'am.
And Sudha also there. Sudha, you are from which place? Yes. Sudha, are you there? Sudha, are you there?